What's up everybody, Tom here with another video. In this video, we'll be covering the latest stock market news, as well as the recent earnings reports in the stock market, and our technical analysis thoughts on the S&P 500, Nasdaq, volatility index, Dow Jones, US dollar, and gold. There's a lot to cover in this video, but because of the increased volatility that we're seeing in the markets right now, it's key that we have a plan and that we're prepared to take advantage of opportunities. Let's take a look together at how we could be doing that. Stay tuned. So as we like to do as a community together, let's take a look at what happened yesterday to try to get an understanding of what might be happening in the markets over the next coming week, if not months. Overall, it was a sea of green, specifically in the technology sector. But this was all in advance of earnings. So there was a bit of hype, bit of optimism coming back into the markets. If we take a look at the markets now though, you'll see 3271, 11,177. So they're down actually after the close. And this has me thinking, well, how many retail traders were trapped yesterday into earnings? Notice there was a steep incline throughout the day, and then all of a sudden, just near the close, selling started to happen, most predominantly on the Nasdaq. You'll notice the Nasdaq was the one that got sold off the most. When we look at the sectors, it's the same thing. People buying into the technology sector throughout the day, and then just before the close, a bunch of selling came into the event. And overall, what does that mean? Apple, Amazon, Facebook, Alphabet, just to name a few, were some of the big stocks that came in yesterday with their announcements. Now, Alphabet did really well. It actually went up upwards of 10% in aftermarket trade. But this is the thing about Alphabet and Google. Remember, we mentioned this a few weeks ago. 2 weeks ago, newspaper articles, online things, they were all talking about how Alphabet was a terrible investment and things were not looking good. It's the standout performer of the last week and a half. And it just really brings up the point that I've been hammering home to the community recently, which is that all of us are susceptible to this information. And the best thing to do is to follow the price action on the charts that we'll be taking a look at how to do throughout this video. It's not best to just follow what other people's opinions are. Make your own decisions and make informed decisions based on the price action. Twitter also dropped around 12% here, so that was not performing well. Amazon was down even after stellar results, and Facebook slightly up. But the big story was Apple, the biggest stock in the stock market itself, fell over 4% on weakening China trade. So basically we saw a weakness in China sales, and that was enough to instantly sell Apple off. Now, even though they sold a lot of actual laptops and a lot of computers, we did see weakness there, and that's just to show you when you're in a growth stock, even a slight miss can be enough to move the actual stock a lot. And that's what happened with Apple. I think it was a really big bull trap in terms of the retail community. When we take a look at the CBOE put call ratios coming into the market, we can see here that it was a 1.73. It's actually down on the previous day. So there was a decent amount of calls opened yesterday in the market. So we'll be taking a look at that and why it's important a little bit later. But firstly, let's talk about the VIX or fear index. The fear index was spiking up yesterday. We hit a 41.3 and then we came back down a little bit, really testing from the highs. Let's go down to the daily and just have a quick look at this. So VIX made a slight high, then it came down, tested the previous resistance wicks over here at around 35, 36, and then bounced back up. And that was really after earnings, we saw the VIX start to come back up and through. Now we still expect the VIX into the election to potentially go up to 45 like it previously did, that 44.5, 45 zone. And this is just really showing that anything can happen in the stock markets right now. We could see moves upwards of 4 to 5% in the indices on election day. That's kind of what it's telling us. Now, that's an extreme move, but we saw recently this week a 3.5% move. So really anything's going to happen, and depending on that result, there's going to be a lot of movements in certain sectors. So it's going to be a very, very big day. Put call ratios came in. Now here's where I want to get into a little bit of the analysis. Notice that put call ratios declined. So this means that there was more calls coming into the market, more buyers in the market. This is because the retail community, like you or me, have been purchasing into earnings reports. And obviously, if you did that in Alphabet stock, you've done well. But if you did that into Apple, which has been traditionally the biggest bought stock from the retail community in terms of calls on Robinhood and other things, all of a sudden you're not looking so good. And this is what Wall Street does. Even if the report was really good, if there were tons of open short dated contracts, you can better believe that Wall Street would have pushed it down. And that's why we're seeing put call ratios come back down right now. Now, if they continue to decline, actually the chances, being a bit of a contrarian thinker, of the market going through and coming lower becomes increased, because again, that means more calls are being opened, more optimism in the market, or potentially gambling coming into the US elections. When we take a look at the US dollar, I think this is showing us one of the clear paths of people are starting to hedge in the markets. US dollar strength. More importantly, right through our resistance level. We had this resistance at 93.85 as a community. We were looking at this level and all of us said that this is a key zone in the markets. We've talked about it a lot in our live analysis as well. Well, we just broke through that and now we're coming back down to test it from the top down. If we take a look at the daily, I think it becomes most clear that, this is a serious level and we're very, very, very close to really cracking it significantly. Right now, I don't know if I'd say this is a significant break because the body isn't as high as, of course, we'd like. We would have preferred a 94 high, but it certainly is showing bullish momentum for US dollar, which is signaling uncertainty heading into the US election and potentially more downside in the stock markets. And that's why we need to be prepared when we look at the Dow, we look at the S&P, and we look at the Nasdaq overall. So we're seeing a bit of a decline now in US dollar. It'll probably come back down to this 93.85, find some buying pressure here, and potentially continue to increase. Now, if it hovers around here for a while, the longer it hovers above this zone, the more it coils, the more it accumulates. It becomes a stronger proposition if it breaks out to have a very significant move to the upside. Next target for dollar index will be something like the 94.50, 94.60 zone. And why is that? Well, that's where the previous kind of highs were. So if we get continued bullish pressure into the US election, overall it could be as high as 94.60 very, very fast. So let's begin our discussions about the indices right now. And first up is Dow Jones. Dow Jones is moving, and it is moving pretty significantly with a pretty big pattern on it. We spoke about this pattern yesterday. We spoke about how the peaks up here at 29,000 psychological level had MACD divergence on them. And on top of that, we've now got a 20-50 cross appearing on the markets. This is an exponential 20 and exponential 50 moving averages on a significant time frame being the daily. Now, what is a double top? Well, it's the distance basically from a peak to an equal peak and then an intervening trough or intervening line down here. And if a market breaks through these zones and closes below, we usually see the distance being extrapolated out. And this is a significant move if it is to occur. So usually we would see the market go all the way downwards of around a 24,000, 24,200 zone. And that's significant. I mean, that's a big move on the markets. Now, are we prepared for that as traders and investors? That's the question. Are we now seeing already the cracks in the market based on this current price action? When I'm looking at patterns, the reason I don't always take the aggressive breakout or close is because sometimes we have this kind of thing. Some people could expect this to be a close below the previous low. Sure it is, but it doesn't show me enough commitment of the sellers. Usually what will happen, and you'll see this on the Nasdaq, is that the market will close a little bit lower. It'll hit something like a 26,000 and then it will come back up and it will test the previous support over here on the left, act as resistance, and then of course move down further. And it gives us that easy conservative entry. There's always usually a moving average as well that it kind of intersects with that point. So when we look at the Nasdaq, you will see this exact same kind of concept playing out. Right now though, if it closes below and we see a significant time frame close on the real Dow Jones, not just the futures, we are expecting a very large move here in the markets. And this kind of move is the point where we need to start thinking, well, do we want a dollar cost average into the Dow or into the S&P or into the Nasdaq? Do we have a plan on specific stocks that we're looking at and bargain hunting? It's time to get at your analysis, Go into stocks that you've been looking for and pick certain support zones that you're interested in buying those. We'll obviously be taking a look at those levels next week in our live analysis of the markets on Monday and of course on Election Day special itself. But these are the types of things that I always ask myself. Do I have a plan if the market is going to move down here? Because it can move incredibly quickly and then reverse incredibly quickly. We must have a plan whenever possible. When we take a look at the SP 500, you can also have a look here on the monthly. And I wanted to bring this up, and I wanted to bring up this level, 3230, 3200. We've spoken about this a few times. The reason it's such a significant level is on the real market, the SPX here on the monthly, we have body closes previously and a previous wick rejection. Which day are we on right now? Well, here in Australia, it's the 30th of October. We're about to close a monthly candle. If there's further selling, where do we expect the selling to go to? Well, of course, potentially down to the 3230, 3200 level where it'll be finding support. If the next month then opens and breaks below the previous month's over here support, that becomes a very significant level because you're breaking a monthly high or a monthly low. And when you do that, usually money flow comes in, algorithms, everything else starts to trade. If we take a look at things like the daily here, we're getting close to a 2050 cross as well on the S&P 500. You'll notice after hours close, the S&P 500 sold off pretty aggressively with a very large wick rejection over here. And now it's testing lows during the Asian session. If it continues to come down, where do we expect support? 3230 to 3200 level where previous support is. But notice again, not that this is a beautiful double top, but similar to the Dow, this becomes such an incredibly important level to have on our charts. And if the market is to close and go below this zone, us as a trading community, we need to be ready for what's going to happen next. Do we see a 3000? This makes sense. Previous resistance, double supports over here, psychological level. Are we prepared for our stocks at those levels? We need to always have that plan as much as possible. What do we think is going to happen to our favorite stock? What's going to happen to Apple at that point? Is Apple going to hit $100 a share and become a very good buy opportunity for us? It's definitely possible. 3,000 would probably be lining up with something like that. So having that plan is the most important part here. And we're certainly about to get a 2050 cross potentially. And on top of that, underneath 3,200, if it doesn't hold, will really trigger a further amount of selling back down to the 3,000. When we're taking a look at the Nasdaq, here's what I was talking about before for the Dow. Often the market will come up and test levels. Again, we're using the NDX here, the real market. And we use the real market as much as possible in our technical analysis to try to figure out key levels where the real trading volume is finding support or resistance. Now, we've been talking about 200-point levels. The Nasdaq has been moving in 200-point levels. Look at this 20 exponential moving average here, though, on the 2-hour. 1 time rejection, 2 times rejection, 3 times rejection, 4 times rejection, 5 times rejection. Notice how the market closes below, comes back up, tests the level. We've talked about the 11.4, hits the 20 exponential moving average, and then starts to sell off. And it's further down than this point right now. We noticed before at the start of this video, we're trading now at an 11,182. So it just shows that it's worthwhile considering looking at the real market, finding the exponential moving averages, finding the role reversal, finding the psychological levels, and then bringing that into our analysis. And then you can trade the futures, but always look at the real market first. It's a top tip that we always talk about as a trading community on this channel. So where to next for the US 100? Well, it's basically back at this 11,200 level. If it breaks through here, where do we expect it to go? Well, we expect it to go to the next 200 line, which is going to be the psychological 11,000. If it breaks through there, where do we expect it to go? At this point, the 10.8. And of course, if it gets through that point, then you're talking about what we said yesterday, which is the 10,000. So again, we really want to have a plan in place to how we deal with this. Again, if you want to average down in stocks, you want to buy particularly good stocks that you've been accumulating over time, it could be the opportunity into this US election or even afterwards to get those things. So have the plan, prepare the plan, and I like to use the index as a bit of an idea of if it's hitting key support, and I'm seeing other big stocks hitting the support at the same time, that's probably a great buy area for me to get in. And the reason why is we're using the index to make the decisions on the stock. We're using the key metric of the support resistance on these particular ones. So for now, the Nasdaq's really moving between the 200s. 11.2 closed below. If we see that on the real market, all of a sudden we're going to, of course, 11,000. And then after that, 10.8. And then after that, that's a big move after that point, because we're getting through such a critical support line that we could be seeing all the way down to 10,000 and the Dow moving at the same time, and of course the S&P as well. When we have a look over the hedging markets, things like gold, gold's not acting traditionally like a hedge. It's more been the US dollar. We talked about how when gold moves under this 1876 that it's probably going to gravitate towards the 1850. And at this stage, that's certainly looking like what it wants to do. 1850, strong US dollar. This is going to be the next real buying support for market participants. And if it gets under 1850, well, we'll talk about that in the next video. But at this stage, it's looking pretty weak, and we could certainly see it down to 1850 in this bear run that's been going on in gold. Similar to that, silver has been moving very, very bearishly. Silver had a big rejection on it yesterday when it came down here. But again, silver likes to trade at around key levels. So we hit that 23, slightly got under that, but no body close here on the 4 hour. If we get a body close underneath 23, where's it most likely going to go? Previous support being the 22. Remember, silver, every 50 cents has traditionally been a very good support or resistance line for this particular type of instrument. It's always important to know the instrument you're trading and know how it trades. It's kind of like what we say. If you're a trader, often you may only trade 5 or 6 different instruments, become very knowledgeable on them, and then you know how they react to certain situations. If you enjoyed this video, please remember to give us a thumbs up. Of course, subscribe and hit that bell. We'll be coming at you over the next couple of days into the US election with a whole bunch of videos, and we hope that you're enjoying our coverage of the markets. Stay healthy, stay safe, and obviously make as much money as humanly possible. See you in the next video, guys. Bye for now.